Hello, this is the market recap for the 7th of the 6th, 2018. So yesterday we got into this trade. So the price had come down and then pushed higher. And on the 4-hour chart, we were looking for buys. So that allowed us to get into this trade here. So it pushed up the price. We didn't actually get in the second it hit the price because I was away from the computer. But the price came down and we ended up getting in at a slightly better price. So that's what happened yesterday. Then today, that was the recap from yesterday. Then after we made the video, the price just moved along, pushed down a bit, and then pushed higher. Actually, let me just go back over that little bit of movement. So here, where we got in the candle, where we got into the trade, the price pushed up, and what it did was broke this high, which is the previous high, ever so slightly. If you zoom right in, we click on this candle, we can see that the second line down has the Euro USD in brackets high. And high is the last three digits are 329. And if we go to this candle and click on it, it gives us the last three digits of 331. So that was 329, and this one is 331. So this was 2 pips higher. 321. Actually, it might even be a lot less than that. I think it's it's 0.2 of a pip higher. It's basically just neck and neck, but it is higher, so it follows our rules. So when this candle formed, it broke this high, which allowed us to move our stop loss to the previous low, which was this one here. And so 10 pips below the previous low, we moved our stop loss to there, around there. Then the price, actually let me just draw this in at the same time, so the price moved up, then the price moved sideways, then higher, then down, then up, then down, then sideways, then higher again. So when it did that, so let me just fill in this green line, so we're sideways higher, so that's the top there. Then the price comes down and up, then down, then higher. And on this candle, we broke the previous high, which was the previous highest high, which was, which was that one there. So this candle broke that, which allowed us to bring our stop loss 10 pips below the most recent low, which is that one there. And that's about where we are. Our stop loss, it's a fraction low, but it's not good. Okay. So here the price came up. This candle here is quite an interesting one. We call these candlesticks. And if you think about what a candle is in real life, it's made of a body, which is made out of the wax. And then in the middle is the wick. So this is the same thing where the body of the candle is the fat bit, and then the wick is the thin bit. And on a blue candle, the open of the candle is the bottom of the body, and the close of the candle is the top of the body, and the wick shows the lowest trading point and the highest trading point in the same time frame. So this is a 1-hour chart. So in this 1 hour, the price opened at the bottom of the body, went down to this low and up to this high, and then closed at this part of the body. On a red candle, the exact same thing happens, except red shows that it opened higher than it closed. So opened here, closed there. There's no wick at the top, but there is a little bit at the bottom. So that shows us the lowest trading price through this time. And the open was also the high, which just means there's no wick above it. So this, knowing that information, this candle is quite interesting. In 1 hour, the price opened and closed almost at the exact same price. It is slightly red, so it did come down slightly, but it moved down to this low and all the way up to this high, then all the way back down again, all in the same hour. So that was a lot of movement in this 1 hour. Not that it affects our trading strategy, it's just interesting. So anyway, when the price came up and broke this high, we were able to move our stop loss 10 pips below the most recent low, which was that low there. So 10 pips below that gives our stop loss. Then, get rid of that one. Then the price came up again, actually made a sideways candle, then an up candle, then a sideways candle, then an up candle, then an up candle, then a down candle. So that shows us our high. Down, then up. So the price did a little zigzag. Then sideways. Actually, I missed this because it's such a small little movement. Our stop loss goes 10 pips below this low. So that is about there. So 523. I'll just check where the price is now before I do that. 523. The price will get around. Okay, yeah, so let me just do that. 5, 2, 5, 2, 3. Okay, so that means we are now in profit. So this line here, you can see this dotted line, that is our entry, and this is where our stop loss is now. So if the price, wherever it is now, we'll check in a second, if the price comes down and hits our stop loss, we exit for a profit, and that would mean we lock in 31 pips profit. And if it keeps moving higher, we'll keep moving our stop loss up. So the price has come up, then the price came sideways, then down, then up, then down. So if we draw that in, there, then there, then there. Now the price, so we're waiting for the price to either hit our stop loss or break this high here. If it breaks that high, we can move our stop loss up. So the price has come up and sideways, up, up, sideways. So that's not our definite locked in high yet. We're just waiting, and that's where the market's at now. So if the price moves up, we'll keep moving our green line up, and that's where we're at. So currently this trade is in profit, which is fantastic. If the price moves higher, then we'll move our stop loss to the most recent low. If the price comes down and hits our stop loss, then we'll exit the trade for about a 30 pip profit. So that's it. That's the market recap.